Welcome to Looking at the Markets with David Modell. I wanted to give you an important tip about the CCI indicator. That's the Commodity Channel Index. And with the CCI indicator, a lot of people, I think, are using it wrong. What they oftentimes do is they'll just buy whenever the CCI indicator goes below negative 100. Okay, just to give you a quick recap on the CCI indicator, if the price supposedly is above 100, then it's overbought or expensive. And if it's below negative 100 on the CCI indicator, then supposedly it's oversold or cheap. Okay. Well, I don't think it's as simple as that necessarily. You want to have more nuance than that. You might want to add another indicator, such as a moving average, to tell you whether you're in a downtrend, like you see here, or an uptrend. And right now I'm using Apple stock, the 3-minute candlestick chart. But what I'm going to say here, I believe could possibly be applied to other time frames. It doesn't have to be 3 minutes, okay? But everything I'm saying today, I don't want you to just believe it. I want you to do your own research, test things out with demo trading or virtual trading. Don't try them out with real money, okay? So, some people might just buy whenever the CCI indicator goes below negative 100. But here's the thing. If you're in a confirmed downtrend, if the candles are just red, mostly red, and just down, 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 look what can happen. You can lose money over and over. The CCI indicator went below negative 100 here, and if you bought there, well, it just kept going down. It went below negative 100 again here, and then again here, and then here, and then here, and then here, and here. I mean, you would have just kept losing trades over and over and over, all right? So you might want to put a moving average up there, for example, and if the candles are below the moving average, then maybe you might say to yourself, okay, I'm not going to take all these trades because we have a confirmed downtrend, all right? And you might use, I don't know, the 20 period simple or exponential moving average, or maybe a 50 period, or whatever you like, a 10 period, whatever you like to use, okay? That's up to you. Just some way to filter out all these bad trades, hopefully. All right, there's no perfect way here. All right, there's no guarantee that any of this works, but if you can filter out these trades when there's a confirmed downtrend, that would be good. Maybe put another indicator up there. All right, so here's a better example. You can see a confirmed uptrend. All right, the candles would probably be above a moving average sooner or later, like if you put the 20 period up there or something like that. All right. And so if you had bought here, you would have done well. If you bought here, these are all times when the CCI indicator went below negative 100, okay, but you had a confirmed uptrend, and so it went below here. You could have bought, you would have done well. You could have bought here and here and here. I mean, it just kept going up and up and up, all right, as you can see. All right, so that is something to think about. I don't want you to just use the CCI indicator by itself and then keep on losing trades. All right, I want you to know what direction the overall trend is, and that way you can filter out, hopefully, some bad trades. No guarantees, but it's just something to think about. All right, I hope this is helpful to you, and if you want more help with trading or investing, I do offer coaching. You can email me for the coaching at davidmodell@gmail.com. I want to thank you for watching and for listening. I will talk to you again soon.